Hi everyone, and thank you so much for watching my channel The Witty Turtle. In today's video we are going to understand section 44AA, which speaks about maintenance of books of accounts by certain persons carrying on business or profession, right? So we studied that this is particularly about the persons carrying on any business or profession. So before understanding the provisions of the section, first we need to understand what is the meaning of person here, right? So every kind of person has been divided into two parts to understand this section. One is the persons carrying on any business, and the second is the persons carrying on any profession, right? Whom we call the professionals, right? So if we again divide the persons carrying on professions, then it can be divided into two parts. One is specified professions, and the second is non-specified professions, right? So specified profession means any kind of professional who is doing certain work or who is earning money, um, which he is earning by using his knowledge which he has got through proper education, or by acquiring some skills, right? For example, basically जो पढ़े लिखे लोग होते हैं, the specified profession is for those persons whose profession is dependent on proper learning, proper knowledge and skill, right? Who are educated people, who are qualified people, it is for them. And non-specified profession means the persons carrying on the professions which generally not necessarily requires any professional or educational qualification, right? So when it comes to specified persons, who all come under the list: CA, CMA, CS, engineers, architects, your any kind of medical professionals, then your legal professionals, then interior designers, any technical consultancy, and all the list of these specified persons are notified by the CBDT, right? Central Board for Direct Taxation. They have notified which all professions come under the list of specified persons, specified professions, right? Now, now we will understand what is the conditions, or what are the conditions, or yeah, basically what are the conditions needed to be satisfied for the specified professions to maintain their books of accounts. As you can already see this on the screen, so when it comes to profession, we generally do not talk about the sales. We talk about the gross receipt. What is the meaning of gross receipt? टर्नओवर कितना है कि by providing a certain kind of service, how much the professional is earning, that is known as your gross receipt, right? So again, for the specified professionals, it says that the limit is set as 1,50,000 in all the three immediately preceding previous years. So the first point says that if the gross receipt in the profession exceeds 1,50,000 in all the 3 years immediately preceding this current previous year, right? If your gross receipt is more than 1,50,000 in the last three previous years, immediately preceding previous years from your current previous year, so in that case, what happens? In that case, the specified professional has to maintain the books of accounts and other documents as prescribed by Rule 6F. Rule 6F. In the end of the class, we will understand what is the meaning of Rule 6F, right? Now, coming to, okay, so here in this case, you can see there is a small box in the left side where the previous year has been written. So here, three tick marks are there. That means in all the three immediately preceding years, you have your gross receipt should exceed 1,50,000. Should exceed 1,50,000. Now coming to the second part. The second part says gross receipt in the profession does not exceed 1,50,000, means it is either 1,50,000 or it is less than that. 1,50,000 or less than 1,50,000 in any of the 3 years immediately preceding the current previous year. It means that in this is the current previous year, and immediately preceding three previous years, if in any one previous year, it does not exceed 1,50,000 gross receipt. So in that case, what happens? In that case, as they are all qualified people who know how to maintain books of accounts, so Income Tax Act has directed them to maintain the books of accounts and other documents, as it may enable the assessing officer to calculate their taxable income. So it says that you have to maintain the minimum books of accounts. You don't have to maintain everything in a proper detailed manner like the previous one, but in this case you have to maintain all your books of accounts and documents, so that in cases of need, the assessing officer should be able to calculate your net income, your taxable income, net taxable income, right? So now, what is the meaning of this minimum books of accounts? That we will also understand in the end of the class, right? This basically includes your ledger, cash book, etc. Now, in this case, you might ask a question that if our profession is newly established, right? For example, you cleared your CMA in December 2022 term, and now from April, you have started your business. You have started your practice as a CMA, right? So, in that case, what happens? In that case, you have to check whether your gross receipt is likely to exceed 1,50,000 in this previous year or not. You have to check whether it is likely to exceed the specified amount or not. Likely का मतलब क्या होता है कि क्या आपको लग रहा है कि इस साल आपका जो ग्रॉस रिसीट है वो 1,50,000 से ज़्यादा होगा. It is totally based on your assumptions and presumptions, right? Or your what do you call that, estimation, right? If you have estimated that yes, this year I might exceed the threshold of gross receipt of 1,50,000. So in that case, what happens? In that case, you have to maintain your books of accounts and documents as prescribed by Rule 6F. Whatever is written just above that, the same provision will be applicable, right? And this is, and when it comes to newly established profession, which means the profession started in this current previous year, so in that case, what happens? In that case, the word likely is used. It is likely to exceed 1,50,000, right? And if your gross receipt is not likely to exceed rupees 1,50,000, so in that case, what happens? In current previous year, so in that case, you have to maintain a minimum books of accounts like ledger or cash book, etc., right? Now, another question which may come is that if the profession has started for the last 2 years only, right? It is not a full-fledged profession yet, but it has started 2 years before only. So in this case, what happens? Because the provision says that the gross receipt in the profession should exceed 1,50,000 in all the three previous years, right? In all the three immediately preceding years, starting from the current previous year, right? So in this case, if the profession has started only 2 years back, then in that case, instead of considering the three immediately preceding previous years, you have to consider only two immediately preceding previous years. जब से स्टार्ट हुआ है तब से ही आपको लेना है, right? Now, I hope this provision about the specified profession is clear for you. Now, coming to the second point, which speaks about all the persons engaged in business and all the persons engaged in non-specified profession. Non-specified profession means any kind of plumber or electrician और जो घर का काम करते हैं, घर बनाने में क्या बोलते हैं उनको, मिस्त्री बोलते हैं ना, what do you call them in English? डेली लेबर नहीं, जो भी है, all those people are known as your non-specified professionals, right? So in that case, in case of non-specified professionals and business persons, the rule is given as the profit from such business or profession exceeds rupees 1,20,000. It means 1,20,000 more than that, right? Or the total turnover or the total sales or gross receipt exceeds 10 lakh rupees. You have to consider either of these two things. Either of these two conditions should be satisfied, okay? which means your profit from such business or profession exceeds 1,20,000, or your total sales or turnover or gross receipt exceeds 10 lakhs, right? So if any of these two conditions are satisfied in any of the three immediately preceding previous years, then in that case what happens, you have to maintain your books of accounts and other documents which may enable the AO to calculate your taxable income, right? So in this case you have to maintain your books of accounts. So here the point to be notified is that um, any of the 3 years immediately preceding, when we were studying about specified profession, so the provision said that your income should exceed 1,50,000 in all the three previous years. But when it comes to the non-specified profession, in that case you have to maintain your books of accounts if in any of the three previous year, अगर एक साल में भी 1,20,000 और 10 lakhs वाला लिमिट क्रॉस हो रहा है, then you have to maintain your books of accounts. Minimum 1 year you have to cross your limits, then you have to maintain your books of accounts, right? Now, in this case, it has specifically mentioned that in case of an individual or in case of an HUF, Hindu undivided family, these limits are given as, in case of profit it should exceed 2,50,000, which is the basic exemption limit, and in case of total turnover or sale, the limit has been given as 25 lakhs. 25 lakhs, right? In case of individual and HUF, the profit from such business or profession exceeds 2,50,000, and the turnover or the sale or the gross receipt exceeds 25 lakhs. So in that case, they have to maintain their books of accounts and other documents so that whenever needed, the assessing officer may calculate their net taxable income. Right? Now coming to the next point, it says that if the business or profession has started in the current previous year, so in that case what happens, if the income like if the profit is likely to exceed 1,20,000 or 2,50,000 as the case may be, or the total turnover or gross receipt exceeds 10 lakh or 25 lakhs as the case may be, right? So in that case you have to maintain your books of accounts, right? Now, coming to the next point, it says that if the above prescribed limit does not exceed, right? If this 1,20,000 or 2,50,000 or 10 lakhs or 25 lakhs limit is not exceeded, so not exceeded in all the three previous years, so in that case, what happens? The SSC is not required to maintain their books of accounts. So when we were studying about the specified professionals, in that case, even if the limit is not crossed, still they have to maintain the minimum books of accounts. Why? Because they were qualified persons, qualified professionals. But when we are talking about non-specified professionals and business persons, so in this case, the if the specified limit is not crossed or not exceeded, so in that case they are not required to maintain any books of accounts, right? They have to check whether the prescribed limit has exceeded once, at least once in the last three previous years or not. If it has exceeded, then they have to maintain the books of accounts. But if it has not exceeded even once, then they are not required to maintain their books of accounts, right? I hope this is clear. Now coming to the next point of this particular section 44AA, it says about presumptive taxation. Presumptive taxation we have already studied, where it says that for some cases a particular prescribed rate has been given in the Income Tax Act, right? And the profit shall be calculated according to that prescribed rate only. So in this case also, we have again we have studied this particular provision in section 44BB, section 44BBB, and section 44AE also, right? It says that if the SSC has claimed the PGBP income under these three sections, section 44AE, section 44BB, section 44BBB, so in that case, if the PGBP income is lower than the presumptive rate, for example, the presumptive rate has been given as for example 10%, right? And your actual PGBP income is coming as 3%. So in that case, maintaining books of accounts is compulsory. Why is it compulsory? Because to prove your point, to prove that your actual income is less than the prescribed percentage, to prove this particular thing, you have to maintain all your books of accounts. Then only you'll be able to show your, then only you'll be able to prove your point, right? Yes, we have already studied this. Now coming to the last point of this particular section. So in this case, again, in case of section 44 AD and section 44 ADA, it says that if your PGBP income is less than your PGBP deemed income, and we're talking about, and it means all these two conditions, both these two conditions should be satisfied, right? And your net taxable income is more than your basic exemption limit. So in that case, maintaining books of accounts is compulsory so that AO can compute the income whenever it is needed, right? So what are the two conditions? The two conditions are your PGBP income is less than your PGBP deemed income, and the net taxable income is more than your basic exemption limit. If these two conditions are satisfied in case of 44 AD and section 44 ADA, so in that case, what happens? You have to maintain your books of accounts, and it is compulsory to maintain your books of accounts. Now coming to another thing, we studied that in case of specified professions, maintaining books under rule 6F is necessary, right? For those persons whose gross receipt exceeds 1,50,000 in all the three immediately preceding previous years, right? So in this case, what is the meaning of all these meaning of books of accounts under rule 6F? The first thing is that cash book, second is journal, ledger. The fourth point is very important. It says that carbon copies of bills which exceeds rupees 25, which is issued by the person. For example, if you have sold anything which is more than 25 rupees, so in that case you have to keep the carbon copies of the bills, right? And the next point says that whenever you have paid something or you have received any amount which does not exceed rupees 50, right? Rupees 50 rupees. Now you might be thinking why these limits are given as so small, because Income Tax Act came in which year? 1961. At that time, rupees 25 and rupees 50 used to be a huge amount, right? So hence, after that, no amendment has been made. So here it is written that. So it means that it is less than rupees 50, right? In that case, you have to keep a payment voucher which is prepared and signed by the person, right? Payment voucher means any kind of handwritten voucher where you have mentioned that yes, you have ordered 15 cups of coffee which costed you around like we are taking it as 3 rupee per cup. So 15 cups of coffee, it costed you 45 rupees, which is less than 50, right? So in that case also you have to maintain these particular vouchers, payment vouchers. And lastly, it says that medical professionals are required to maintain two more books. Medical professional means any kind of practicing doctor, which includes your dentist also. I'm not very sure about the paramedical persons, but yes, all the doctors and dentists are required for this, are required to maintain two more books along with all these books, which are daily case register in form 3C. Daily case register means how many patients they are seeing every day, right? How many cases they are handling every day. That daily case register has to be maintained, and the form number has also been given, that is form number 3C. And the second point says that inventory record of drugs, inventory record of whatever medicines or any other consumable accessories which is used. Consumable accessory includes all your use and throw gloves, your just say for example, the dentist, they use some tools to work in your inside your mouth. So all these things are known as your consumables. Now you might be thinking that when they are already maintaining a daily case register, then why is it needed to maintain the details of the inventory and consumables? The reason is that obviously the medical professional will also try to reduce their income, to to show a less number of patients that they have handled. For example, in a day they have handled around 20 patients, right? But in their daily case register they are showing only 5 cases, 5 patients, right? So in that case what happens, if they are maintaining an inventory record where they are keeping all the medicine, keeping check of all the drugs or medicines or consumables, so in that case उनकी चोरी पकड़ी जाएगी. All their whatever they are trying to hide, that will come out. How? See, for example, the professional is saying that he is handling only 5 persons, 5 patients every day, but at the same time his usage of gloves or his usage of some use and throw tools is more than 40 or more than 50. So in that case वो पता चल जाएगा, right? They will be caught red handed that yes, you are using you are checking only 5 patients every day, but your usage of the materials needed, your usage of the consumables is more than that, right? Is way more than that. So in that case it is it gets very evident that the medical professional is lying, right? So for that reason only all these drama are written in the income tax act. Now, another thing is that the books of accounts and other documents shall be kept and it shall be maintained for a period of 6 years. For a period of 6 years from the end of the relevant previous year. For example, this is which previous year? 2022-23. So, in this previous year, the assessment year is 23-24. So, the assessment year ends on 31st March 2024, 6 years after the end of the assessment year. So that comes on 31st March 2030, right? So the books of accounts of this year shall be maintained up to the end of the assessment year 2029, 2030, right? Up to 31st March 2030 they have to maintain all the books of accounts, right? Coming to the next point, it says that if any assessment has been opened under section 147, so in that case, what happens? All the books of accounts relevant to that assessment shall be kept and it shall be maintained until this particular assessment is completed, right? Now, another thing is that books of accounts includes along with all these things, it includes all the books whether in written format, that means in handwritten or printed format, or any form of electromagnetic data storage, or in any electronic form, right? All those things are known as your books of accounts. All the electronic format things are also included in the list of books of accounts. Now we are going to study section 271A. Section 271A, which speaks about penalty for failure to keep or maintain books of accounts and documents. So, if any person, any professional fails to keep and maintain the books of accounts and the documents which is mentioned under section 44AA, so in this case, the assessing officer may direct such person to pay a sum of rupees 25,000 as the penalty for not maintaining the books of accounts, right? Simply, you just need to remember one number, that is 25,000 as penalty, which shall be directed by the assessing officer, right? I hope this is clear. I know this is a very long video. So after watching this video, please go and read the same from your book so that your entire concept will be cleared. And if you find this video helpful, then please hit the like button, subscribe to my channel, The Witty Turtle, and also don't forget to share this video with your CA and CMA intern and final friends so that everybody will be benefited by this revision series.